Sanjay, hi, good afternoon.
Good afternoon.
Nimish is also with us. You had a good conference. You want to tell us the key highlights, the key talking points that emerged out of this 3-day conference?
Sure. So the first and the most important thing, if you were to try and summarize it, is that now India is kind of at the beginning of the stage of a payback period, right? There's a lot of things which have happened in the last 2 years. The government has done a lot of work, and we've gone through the bad assets problem, we've gone through the earnings slowdown problem, and the industrial slowdown problem. But many of these things seem to be falling in place now. The government work is paying off, and there's a slow and a gradual recovery, and there's a recognition of that. So I think, very holistically speaking, beginning of the payback period, that's the kind of stage in which India is at this point in time right now.
Okay. Sanjay, hi. It's nice to use that phrase, payback period. We haven't heard that. But, you know, you had many policymakers speak at your conference, the likes of Jayant Sinha, Piyush Goyal, etc. What is the feedback that you're getting, and where do you see the signs of recovery when you compare it to different industries?
Sure. So first is the anecdotal evidence, cement sales, two-wheeler sales, commercial vehicle sales, retail credit for the banks. All of them are growing very nicely, and we've seen the recent GDP numbers also. At the same time, if you look at the macro numbers, FDI numbers continue to remain very strong. In fact, in the last 12 months, we had more than $55 billion of FDI, which is at a record level that we have seen. And that's not gone, so to speak, unrecognized. So I think if you talk about the economy, the FDI, urban consumption, and the government spend, that continues strongly. The slightly weaker areas remain the rural consumption, and hopefully the monsoons will turn that around if we have good monsoons, which is what the prognosis is. And on the issue of private capex, I think the realization is that it's going to take some time, a few quarters. We need the other legs to kind of fire in first, and the capacity utilization to go up. And after that, I think we'll see the private capex. I think the main thing coming from the ministers and the government speakers is more about the socio-economic imbalances in the country, which is what many of the long-term investors were fairly concerned about. The fact that India cannot continue to grow and remain these two countries where the rich keep on getting richer, right, and people just take a kind of a blind eye to what's happening to the state of the rural economy. And when the power minister spoke about electrifying 18,000 villages, and that's a big deal, right, because in 65, 67 years we have not done much, but electrifying 18,000 villages and power for all by the year 2019, or when the minister Jayant Sinha spoke about the kind of knockdown impact and the positive implications of the Jan Dhan Yojana, Aadhaar being used for subsidies and for paying people, cutting out middlemen and cutting out corruption. Those are the kind of things that I think the longer-term investors were very excited about, that finally India is trying to take those steps forward and think longer term rather than think incrementally about the next year or two.
So, you know, just to follow up on that, you at Morgan Stanley are overweight on some of these power utility companies, whether it's NTPC, whether it's Power Grid. And to be fair, this sector has not made money for investors for a few years now. Do you think we're at a threshold of, a big up move in some of these utility companies?
For sure. Right, because I think what is happening is that with all the problems at the grassroots being resolved, or rather at least in the process of being resolved, and the state electricity boards and the DISCOMs also turning around, at some point in time, and we've already seen some anecdotal evidence that over the last 3 months, year on year, the power demand has started going up. Effectively, plant load factors will start rising, and at the same time, coal availability is not a problem. In fact, now Coal India has to actually think about selling their coal and figuring out how to sell their surplus, which was not a situation a few years back. All of these things play in the favor for the better managed utilities, at least. The key is that anybody who has strong balance sheets in many of these sectors will continue to do much better.
Sanjay, before you join us, you briefly told us about how long-only funds are thinking a little differently for India at this point in time. We remember same time last year at the conference, Nifty was 8,000. Again, we are at 8,000 levels. But we are outside Nifty. There is a lot of outperformance happening. So, is there a case now that from bottom up, now people will look at top down because macros are coming to place? Government is working on a lot of reforms. Is that a big call now that now investors will look at top down rather than bottom up?
So look, I think India is in this transition phase, right? The global tailwind is not yet strong enough, right? And it's not a situation where a rising tide sweeps all boats yet, right? So to the extent that there is a fledgling recovery in the earnings, in the macroeconomic environment which is improving, I think the theme, at least for the foreseeable future, is that the strong continue to get stronger,
Okay.
right? And the weak will definitely need to fight and struggle, right-size the balances, wait for the demand pickup. So I don't think it's going to be everything going up at the same
So
time.
that would mean still avoid real estate, infra, the laggards who've been laggards for a while now?
So more than sectors, I think one has to kind of distinguish companies between good balance sheets and significant operating leverage versus bad balance sheets and high financial leverage in different sectors. Doesn't matter which sector it is, because there are companies in the real estate sector, in the infrastructure sector with excellent balance sheets and utilization levels which are low. And as the demand starts coming back, they'll be the first to capitalize upon that.
Sanjay, the problem with that argument is that, especially if we talk about the consumption theme, the good stocks are very expensive. I was just looking at some of the nifty stocks. It's hardly any value in terms of historic perspective for a lot of leading stocks. How do you deal with that?
So there are two philosophies one needs to adhere to. If one wants to come to India and find value, one should not come to India. If one wants to invest in India, one is to invest in growth.
So growth will continue. At Morgan Stanley, you use the term GARP, right? Growth
Right.
at reasonable price.
Yes.
So that reasonable price for now is out of the window. You got to buy expensive.
Well, I think there are lots of good companies, strong balances, and they are reasonably priced as compared to the median valuations of the past. These are not outrageously expensive, and these are companies where there is significant operating leverage. And I think there are enough number of such opportunities to buy into, so not too worried about that at this point at least.
Okay, the
I
market
think
is
the market is saluting what you're saying, because it's up almost about 0.5%. Whole day the market was doing nothing at all, and suddenly it's getting very heated up
No,
and
the
excited.
reason is that people were so busy with the conference, now people have just kind of got...
Actually, I got a lot of feedback from dealing desk today that the volumes are lower thanks to Morgan Stanley, because most of the investors are there and not actively trading into the market.
Now that the conference has got almost over, I think people are going back to their trade.
But I'll tell you something, on a serious note, a lot of bank nifty stocks are now surging. In fact, the bank nifty is at the high point of the day, 130 point higher on the bank nifty, and led by Axis Bank. That stock is now up 2.5%. SBI, look at that, one day of consolidation, and the stock is gaining again, and Tata Motors DVR also doing well, up about 1.5%. Sorry.
Oh yes, so Sanjay, you did say that okay, the market is, or India is at least at a payback period. What do you think the upside for this market could be, and how much importance would you give two of these risks, so to speak? One is the possibility of a Brexit, and two, the possibility of Governor Rajan not getting his term
Or he not
extended.
accepting the term.
So I think the bigger near-term risk to the market are the global factors. We talk about Brexit, we talk about what the US Fed does, we talk about the incremental data coming in from China, where it seems that the mini recovery is again kind of slowing down. So I think the global factors are really important. As far as the domestic factors, we need to wait and watch how the monsoons pan out. Reserve Bank of India, let's recognize the fact that Reserve Bank of India is an institution, right? And an institution where the Monetary Policy Committee is being established, the monetary framework has been established, the inflation levels have been enshrined now in the Reserve Bank of India. There's no doubting the fact that Dr. Raghuram Rajan had come in at one of the most difficult periods for the Indian economy, and there's no eluding the fact, or rather there's no ignoring the fact that he's done a fantastic job. If and when, and as and when he goes, he's going to leave a very strong legacy behind. But I think we also have to respect the fact that the Reserve Bank of India is an autonomous institution, and many of these things are institutional decisions that the Reserve Bank of India takes. Furthermore, in the last 2 years, we tend to ignore the fact that a lot of the good work which has been done because of the fact that the Reserve Bank of India and the Finance Ministry have worked in tandem, both on the monetary side and the fiscal side. And it's a fantastic partnership. So long as the partnership continues, I think we should remain sanguine about what's going to happen.
So, Sanjay, you've spoken to a lot of FI investors in the last 3 days, and you interact a lot with them over a period of time. Generally, what's the sense towards India? Because we keep hearing that India is not getting decoupled. It's becoming a low beta market, as to what Jonathan had to say. Generally, what's the sense you pick up when you talk to a lot of your large clients?
So look, the larger investors globally desperately want India to succeed, right? Because there are very few growth pockets in the world right now. Many of the countries in the world have relied excessively on monetary stimulus, and the marginal utility of monetary stimulus has been diminishing. India is one of those unique markets where there is inherent growth potential, and we have balanced out monetary stimulus and fiscal policies. So I think the real reason why they've come here is just to try and get their kind of feet on the ground, understand at what stage of the recovery we are. But I dare say that they are more desperate than even us in India for India to work, for India to succeed, and for India to do well.
Okay, Sanjay, stay on with us. We'll take a break on that note. On the other side of this break, of course, Rhythm Desai will also join in, and we'll have a lot of